The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome back from the holiday. We're going to take a look at these markets this morning. Of course, we start with the DAX each day, and as you can see, we've made a really nice Gartley pattern here on the hourly chart. That sets up a negative bias for us folks because these markets run hand step. You know, every time one goes up, the other goes up, one goes down, the other goes down, usually. Now, sometimes that's a difference, but this morning it looks like we've completed a Gartley pattern in the DAX, and we should be heading down, and that gives us a bias to the downside today. Now remember, on Thursday, the day before holiday, there was a strong bias that the market was going to close higher, and it did. You know, the Dow was up a couple hundred points, the S&P up about 35, and then I think the NASDAQ was up about 114. Both of them stopped right at major resistance levels. We'll try to show you that a little bit later. But the next one we want to look at, of course, here is the FTSE, which is the UK market. As you can see, it also made a beautiful ABCD pattern, you know, just absolutely spot on where AB equaled CD. Now, I wanted to take just a minute to talk about that ABCD pattern just a little bit because it is so very important. Now, I'm going to show you something that I don't trade. I haven't traded it in well over 40 years. It's relatively active. Sim only trades it quite a bit, as does our good friend Rich Anderson. It's the feeder cattle, which are the baby cows, the 400 to 800 pounders that they're feeding to become big cattle. And this is what we're going to take a look at now. Here is the chart for feeders. Now, they have a pretty good open interest, you know, for you know, the hedge funds trade it, so it must be okay. But I just wanted to point out this happens to be the August feeder cattle contract. And what you're looking at here, folks, is you'll see those two triangles. What I'm trying to show you here is that the time down between the high in November and the low in December, a 6-week move down, both of those moves are exactly equal coming in here to August the 5th. That's on Thursday. 1 second, please. So if we take a look at that, at that point, we're going to have a perfect AB equals CD in price and time. This is what W.D. Gann talked about when he was referring to price and time coming together. So you have the ABCD pattern coming together. It'll either be at the 1.27, which is within about 1.5 points from where we are now, or we could be looking at another 6 points down at the 134, 133 level, which would be the 1.618 expansion. That would also make it we're at we are at a 3 drive to a bottom as we come in this morning, because those patterns between November, December, and April are certainly a 3 drive pattern. But the ABCD structure says it shouldn't be until April 5th. If you'll notice what happened on Friday, you had a market that took out the previous 3 days highs by just a little bit, and then just rolled over and, you know, immediately dropped 5 points. That's a sign of a very, very bearish market. Now, I'm not sure, but my guess is there might have been a cattle on feed report coming in right before the holiday, or some type of report that might have done this, but that was a pretty good drop. We're seeing the same type of pattern, not as clear as we're seeing in the feeder cattle. It's very, very clear with this ABCD pattern. We are seeing a buying opportunity coming in to the nearby August cattle futures. Well, June's the nearby, but June and August cattle futures are showing that some type of a bottom is due to come in this week. So watch these feeders. We'll follow this just to show you if it works or not, because we know sometimes these patterns work, sometimes they don't. So that's the main thing of, you know, what we're looking at. So we'll see how this comes together before we're all done here. Someone asked a question over the weekend about how I handle the news. folks, I just look to see how the market reacts to the news. That's really, all I try to do. Years ago, I used to be sort of a fundamentalist until I realized that it was the price charts that made things go up and down. If there's more buying, prices are go up. If there's more selling, prices are going down. The good part about that is they can't hide from you. They can give you misinformation. They can lie to you. They can do about anything they want to, but they can't hide, because if they're buying, prices are going up. If they're selling, prices are going down. That's pretty much what we're looking at when we're watching some of these markets right here. So this morning, as we come in, we're looking at a negative bias here in the DAX and the FTSE. That gives us a slightly negative bias here, because the bullish bias that we had for Thursday, the day before the holiday, is now gone, because that's only a one-day bias. And so we're at a level here that we could be at some serious spots. Now, if I should take just a second here to give you an idea of what we did in the E-mini S&P on Friday, just to give you a rough idea, because we're trading pretty close to the same level that we were on Friday. I think we're just a few points below, but you'll see on Friday we made a perfect 78% retracement from the high of March 27th, and we also made a 1.618 expansion of the whole daily range that we had on the 28th to the 29th. That's an expansion range at 1.618 up there at 2660, and the 78% level came in at 2662. The high was 2660 and a half, and then of course we broke down about 35 handles, including overnight, and now we're coming into some support, as you'll notice there, that we've seen this morning at 2628. I believe we're trading around, last time I saw it was around 2632. So keep an eye on it. If we get above the 2660 level, that would have a bullish bias. But frankly, I think we have a bearish bias today. Whether that'll continue on, we'll have to just wait and see if that's going to happen. Now, on Thursday, on tomorrow, we're going to have Dr. Al Larson from Money Tide, the author of one of my favorite books, Your Electric Life, that you can get off the internet for free, that explains how the lunar cycles work physiologically. Al has 2 PhDs, one in computer science and the other in electrical engineering. And then also on Friday, we're going to have one of our good friends on, Bill Meridian from Cycles Research out of Vienna, Austria, who's going to talk to us about the gold market and a few other markets that we're watching very, very closely. So we wanted to watch this. We're getting very close to a major buy signal in the gold market, folks. I wanted to buy it this morning, but I took the better part of valor on this one and said I'll try one more time to see if we can get down to that 1285 level. That's $50 away, but we've broken down in the platinum market by quite a bit. We went quite a bit below that in the 78% level, which came in at 936, and we went below that. I think we're back above that level right now, but I think we're really close here in these markets for gold and silver and also in platinum. So we'll take a little break here to pay a few bills. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're taking a look here now at the price of Facebook. It's in the news all the time now because of this data breach that they had, whatever it was about, I'm not quite sure. But I just wanted to bring this pattern to your attention. One other thing about this, you'll notice these waves that I have, marked in here with these little red things. That's just a way of looking at ABCDs. Now, Basil Chapman here at TFNN also does a great job of wave analysis, and he's going to be doing a webinar, I believe it's this week or early next week, and it is really important that you watch that because it's another way of looking at this. It's another way of measuring and also determining whether you're at a certain level that could be, very, very important. But as we look at Facebook, you'll notice that when we made the bottom there at the 148 share level, we were making a 1.27 expansion of the move from September into January. And if you'll notice, that was a big ABCD pattern that was just another one that was absolutely perfect. If you would take the time to, like Jim Twentyman says, defy human nature, do the work yourself. If you measure the distance between A and B in price and time, you notice that it came in right at that 195 level, and the high, I believe, was 196 and change. And now we've come down to the level where we are now. We've had a well over $12 rally here. That was basically a relief rally. Now, what it's going to do from this level, we'll have to wait and see. But any move below that 150 level will set up a move down to at least the 144 or possibly 131. What you'd like to see from a technical basis here, I've drawn it in just to see if it's going to happen. We don't know if it is or not, but if this pattern were to occur where the market rallied up another 16 points up to that 175 level, that would be a 61% retracement off of the high from January 29th, which was also a new moon, if you'll recall. And it would also be a 78% retracement from the high we made in early March, also being a new moon. So this is something that we're looking at. We have a full moon out here in the desert in Tucson that is just like daylight. I mean, you wouldn't have to turn your headlights on. It's so bright. And it is really quite beautiful. Yesterday was probably one of the most emotional Easters I've had in a very, very long time. I got an incredible email from someone I haven't talked to in, well over 15 years. I met him 35 years ago, I believe, at an Anthony Robbins seminar that was back in 1987, I believe. And he became a student of mine, and now he's actually, he lives in a foreign country, a very large foreign country that starts with an I, and he trains folks over there how to trade the euro. And he said he's had some really great success. But the thing that he mentioned in the letter that was really really quite nice is the fact that I've always used Tony Robbins' quote, you know, live every day in an attitude of gratitude and may God bless. And he said that he used that with his children and his students and everybody. It really made me feel good. About 3 hours after that, being April Fool's Day, I called one of my very, very dear friends, someone who's very close to me, going back to the days before Drexel, when I first met 20 as a matter of fact, and I wanted to wish him a happy birthday, and I talked to him, you know, 3 or 4 times a year at least, and especially on his birthday. But yesterday I realized that something was seriously wrong. He has really started to, he's in the early stages of something very, very serious, and it was, it really shook me up. I mean, I'll tell you, it just literally, because I'm getting up in those ages, and I always focus on the numbers because I'm really good with numbers. So when I start I know I get dyslexic once in a while, but you know, when I start not remembering numbers, then I know that there's something wrong. But anyway, life goes on, and that's the way it is, and that's why we should live every day in an attitude of gratitude, and may God bless. And that's one good thing that we have here at TFNN is Tom O'Brien, who leads our group here, is such a positive thinker, and with the things that he has with his positive formation of ideas and stuff, it's really important to start your trading that way, because if you come in with a negative attitude, folks, just throw your money away because you have no chance at trading profitably. You got to come in with a positive bias, even though that bias might not work that day. Over a long period of time, it is going to help you. Believe me, this is a mental game. Mark Douglas used to tell me that it was 85%, and frankly, he was probably wrong. It's probably closer to 90%, maybe even more, because it's that 9-inch cycle, folks, from your left ear to your right ear that determines how well you're going to do in these markets, because you don't have to know very much to be successful in this business. All you have to do is to be able to understand what the risk is as you're entering these trades, and you're going to be far better off. You don't have to be 100% right, or 80% right, or 60% right, or 50% right. Some of these people can do it with 20%, and they do it by controlling their risk. And that's what you have to do, is focus on the amount of money that you have at risk, not how much money you're going to be making. That's the real key, to what we're looking at here. Now, I want to take just a minute here. We got a few minutes before the break. I want to take a trip down memory lane just to show you what's happened here over the past 38 years, from the days when we had interest rates in the late 70s, 78, 79, and 80. We had the T-bill rates up around 18%. Treasury bonds are selling at a 50% discount, yielding 14%. And then Volcker came in and shut everything down during the 8 years he was there. Rates were average 10.5% when he went in. When he came out, they were around 5. You'll notice Greenspan during 87 through 2006, that 20-year period, the average rate was around 4.8%. And then, of course, when Helicopter Ben came in, the rates started to drop. We got down with quantitative easing to 1.5%. And then Yellen came in and pushed them actually below zero at one point very shortly. And then they got down to 0.5%. Increasing our national debt by $3.7 trillion. That's the quantitative easing. And I don't know how this is all going to work out, but rates will be going higher, folks. That's the bottom line, so pay very, very close attention to it. One of the things that I focused in the newsletter this week was where we stand with our Treasury bonds. And believe me, folks, we are at the proverbial moment of truth, because we could turn down any moment here and start to see rates start to spike. There's problems in River City in Europe, folks. It's Deutsche Bank. They're having, the stock, if you watch it, it's trading below. Last time I checked, it was below 14, and the price objective on this is minus. So I don't know if Deutsche Bank is, I don't think they'll let the largest bank in Germany go under. just like we didn't, well, we let Lehman Brothers go, so who knows. But anyway, they've got a very, very high risk exposure with counterparty risk everywhere. We've talked about it here on the show quite a bit. So watch the price of Deutsche Bank, folks. Check it every day. I've got a good friend over in Las Vegas that does that for me and keeps a close eye on what's going on over there. But the LIBOR rate, if you remember during March, I think it was up 18 out of 20 days. That's a London interbank overnight rate. In other words, that's what banks have to pay to borrow money, and that rate was going up all the time. And when that happens, there's trouble out there. You know, we saw this in 2006, so let's pay attention to it and see what happens. So we're going to take a little break here to pay a few bills, and then we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the November soybeans. That's a new crop soybeans. They haven't started planting them yet, but we had the planting intentions report come out on Thursday, and as you can see, the report was, very, very bullish, at least for the bean complex, and we've had a bullish bias, and we have position in that, so it started to work quite nicely. But the thing we want to pay attention to is that many of these commodities are starting to to turn. Now the livestock market hasn't, but that's quite volatile, and it moves a lot differently than the grain markets. But the grain markets are showing some signs of really strong life here. We've gotten Christmas corn up to above $4 a bushel or close to it. So that's another thing. But these grains are acting totally not in sync with one another as they should, because the planting import intentions didn't really involve the wheat market. And what we wanted to see here is to take a look at this. Hold on right here, and we'll be able to see what's going on here. Oh, Mr. Z's, one second. Mr. Z's asking a question about traveling to Israel. I've been there once. I've been to Jerusalem and to the Wailing Wall, and I really enjoyed it. I mean, I was only there 2 days, but it was really quite cool. But it's very safe over there, folks. I don't know if you know this or not, but the Jewish government, they have a saying that if you have a Jewish descent, you're in the army. So everybody there is like a soldier. So it's a very, very safe place. And well, even though you hear a lot of the stuff, but I enjoyed it very, very much. A lot of history there, of course, as you can imagine. Okay, the next thing I wanted to talk just a little bit about is the rest of that planting intentions report. Now, as the weather starts to change, and it's snowing today in New York, and it's going to be about 85 here in Tucson, which we don't have any beans or wheat growing out here, but the weather patterns are really squirrely all over the United States, and they've been squirrely all over Argentina. That's what caused some of this move in beans. But if we look at this, we're going to be watching this very, very closely these next 6 weeks. We'll have Simon Lee on very shortly, probably in the next week or so, talking to us about this from Sylvia's Financial, and we'll also have Rich Anderson on. We're shooting for Thursday for Stan Harley to come on, so hopefully we'll get these gentlemen on. Definitely Al Larson tomorrow, definitely Bill Meridian on Friday, and hopefully Stan Harley on Thursday. Let's try it again. Yes, on Thursday. Anyway, let's take a quick look here at the oil market. Folks, the oil market has a bearish bias. And the reason why you say that, there's some cyclical work that says that oil starts to turn down sometime between early April and May and move into a lower time frame. And if we look at this oil market here, you'll notice, just looking at the spot oil, we've made a double top up there at that $66 a barrel level. And last night, we had a really strong Fibonacci level coming in on the hourly chart, coming in at that 65.35 level. We've only backed off about $0.50 a barrel from that level, but that's what we're watching. But on the other hand, if you look at the long-term weekly chart here that we're watching here in the crude oil, you'll notice that the first support that we have there, which is the old high where we had that 78% resistance, and then we made the big ABCD pattern to the upside. That should be very good support. That comes in at $55 a barrel. Now that's down quite a bit. That's more than 20% down from where we are. That's a big hit in oil. But remember, oil moves, very dramatically. If you'll look at the move down between January and May, if you just took that move, which went from $55 a barrel down to $43 a barrel, which is $12 a barrel, and you moved it over to see where it would come to, and there it would be, right where we're looking at from the high, would be right at 55. From 67 to 55 is $12 a barrel. So should be strong support at $55 a barrel, because the market's repeated itself. Go back in 2016, it did exactly the same thing. It dropped $12 a barrel. What did it do in 2017? It dropped $12 a barrel. So markets repeat. So let's see that it's going to do $12 a barrel. That's the bottom line. There's nothing mysterious about it. I mean, it's just numbers. They don't always work. But, if it worked 2 times in a row, why wouldn't it work 3? You don't know which one's going to work and which ones aren't. So that's what you have to be taking a quick look at. Let me take a quick glance here at what's going on with the markets here. We got down near that support again at 26.28 in the S&P. We're now trading at 26.34. There should be some really strong resistance up at the 26.47 level if we get there. and we'll watch that very, very closely. I see the crude oil's down now more than $1 a barrel from that Fibonacci level at the 65.30 level, so it's right at the 78% level, but coming down as hard as it is now on a 30-minute chart, you're looking at something. Let's just get this up here so you folks can take a quick look at it just from the to get an idea of what I was talking about here. We'll bring this up so you can take a quick look at it. Hopefully, I'll get it up here and you'll be able to see it. I think that'll tell you. You can see the 61% retracement there at that 65.30 level. With the big move down, that's up to the ABCD level to come in $1 lower at $63 a barrel. That would be an ABCD pattern over the last 5 or 6 days. So there should be some support at $63 a barrel in the oil if it gets to that point. Now, one of the markets that I really have a close eye on, that I'm just wildly bullish on, as most of you know, and I don't even have a position in it yet, and that is the gold market. I'd really like to see a buy in gold coming in here. Hopefully sometime this week I'm going to be buying gold. So if you're a member of the 24/7 service that we have here at TFNN, I will be buying gold sometime this week. So it's a question of what we're looking at here. Also, the Treasury bonds, those look like they really want to go lower. They've got just about everything facing them on a negative side that you can possibly look at. We've shown that chart so many times in the Treasury bonds and Treasury notes that it is just very, very bearish. We'll put up the notes here just to show you how weak this market really is. It's telling us that rates are going to go higher, but you'll notice here over the last 10 days we had a 2-point rally. The last time we had a 2-point rally was way back in October, and that was from the 125 level. And what we dropped all the way down to 119. That just shows you the bearish nature of this interest rate market, folks. This thing really has some negativity that is just screaming. So pay very, very close attention to that. It's just extremely negative. That interest rate chart that we focused on earlier this morning as we chatted, going back to 1979, pretty much spells it out that things are changing. Quantitative easing is going to be a history unless they come up with something new and inventive. We'll have to wait and see. But to put that much pressure on the interest rate market, that's building up a lot of problems. And if money starts to change, it's going to make a big difference in the U.S. dollar, too. So 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're talking a little bit about traveling and what's going on in the world and stuff. And I'll tell you, just from my experience, the safest airline or at the safest places that I've been as far as going through airports and stuff is number one, Japan. They do everything there but a major strip search. And then, of course, Hong Kong, which is just really easy. That is one of the most beautiful airports in the world, and you go through it so quickly that you just get off the airplane, you go through customs, and there's your bag right there. I mean, it's just amazing. You get on the train, and you're in the city. I mean, it's just really incredible. The other place that was really amazing was in Dubai. I was there 20 years ago, and I mean, there was a guy with an Uzi submachine gun about every 20 feet. I mean, it was just really, really amazing. But when you go into China, folks, and you look up at the sign, and it says, if you sell drugs, we have the death penalty waiting for you. And it also says, if you bring weapons into our country, you get a mandatory life sentence. This puts a really deep thinking mode into people that want to do bad things over there, folks. That's a pretty big deterrent. So I don't know what's going on here with some of the stuff that we see, but some of these countries certainly do unbelievable. Yes, the Hong Kong airport is really unbelievable. The old airport, which used to be right in the middle of the city, was just about like the San Diego airport, which is one of the most dangerous airports to fly into because, you fly over Mexico to come into the country, and you go right through those big buildings. I mean, it's just very, very scary. So we'll be able to see if what's going on with that. I don't know if it's sinking or not, but Sarah would have certainly told me. But it's a fun place to go. If you don't buy a house over there, it's not too expensive. The airfare there is not bad. The hotels have gone up quite a bit because real estate is going crazy, but the food and the transportation. I have a green card, a travel card, an MTR card from Hong Kong, folks. I can travel all over that city for about 50 cents. And I can get on the MTR for 50 cents, which is like riding the subway, only it's super clean and super fast. And it's impossible to fall down on the subway because of the fact that there's so many people there. And that's, the main thing that, we're looking at. So anyway, it's a really incredible, Sarah just told me that it's only 25 cents and not 50 cents. So it's really a good thing. No, I never got a sinking feeling. The only feeling that I have when I'm in Hong Kong is homesick because the best part of travel, folks, is when you come back into the United States of America and you look up at that sign, it says, "Welcome to the United States of America." If you don't get goosebumps, something's wrong with you. I know these young kids at the Mariners game, at the baseball game up in Seattle yesterday, 2 7th graders took a knee in honor of Colin Kaepernick, I bet. Well, they should travel down to some of these foreign countries to see what it's really like in some of these other places. If you go into Mexico without papers, they put you in jail. You come into the United States, you get a year's income, full medical benefits, and a job. So anyway, let's just move on to some of the other things. We got to talk about Bitcoin, folks, because it's under some serious pressure. I wanted to just bring this up to you because we've been following it ever since we started trading at the Merc. When you'll notice that A level up there, that was a 3 drive to a top pattern. That was the major ABCD pattern up there at 19,500. The futures actually opened at 20,000. And, of course, now they're trading under 7,000. And we have an ABCD structure coming down now that should take us down to at least the $4,000 to $2,000 per share level. Now, that's still quite high. But, that's taken the big, impetus out of this thing. Now, for it to be a bubble, it's got to go back below $500 a share. And then that would wipe everything out. I don't know if it's going to make $500 a share, but we certainly could easily see $4,000 a share. That's only, it's just a couple days trading with this one because it's 6,700 right now, and we could easily do that. But the key here, and we pointed this out several times, is that the first Gartley pattern that we had here was at that point C. That's where you had the ABCD pattern, and Gartley said on page 222 of his book, when you have an ABCD structure in a new bear market, take that trade because that's the safest trade you're going to get with the least amount of risk and the highest profit potential. And as you can see, that's what happened. I have not done a trade in Bitcoin. I don't plan to, but I do bring it up showing you because it's technically very, very active. And that's what you really want to be seeing what's going on here. So we'll see what's going on as we go through this. Okay, now what are we talking here about? The NASDAQ getting hammered again. Well, the NASDAQ has been the weakest, and if we get below the 2620 level in the S&P, that's going to be some negativity. But we have a negative bias just because of the DAX and the FTSE, folks. That's the main thing when you're looking at this, is to keep a close eye on that, because that's a real serious thing to pay attention to. So, I don't know what's going to happen towards the end of the day here, but it started with a bias, and I don't think whether we take out Friday's low or Thursday's low or not, I'm not sure. But as I posted to you early this morning on that E-mini chart, it has a negative bias. I mean, we stopped at major resistance on the way down. We have lower tops, lower bottoms. That is basically a downtrend of, a relatively significant proportion. So whether it's going to be like the Bitcoin chart, I don't know, but it has the similarities. There's no question about that. I mean, if you look at the charts, they went up with a vertical rise of, 90%. The slope of the line, like 82%. And, when they turn down, people always get surprised. So, pay attention to that. So whether that means much or not, I don't know. I want to take a quick look here at the utility index because I'm so bearish in these bonds. I believe that the utility index is going to be following this very, very shortly here. You'll notice that we completed this past week a beautiful ABCD structure in the utility index. This is the first ABCD structure in the bear market. That tells us that the rates are getting ready to go higher, not lower. And so this is what we're looking at right here. And believe me, that was a very, very, very shallow rally because, the thing bottomed in late January, actually on the 29th. And here we are 2 months later. And January, February, we're 3 months later, and here, February, 2.5 months later, and here we are only at the 382 level. So this thing, it definitely qualifies as a dead cat bounce, as we see this unfolding, here today. So let's watch that one too, because I think if we keep an eye on it, you'll see that the rates will be going higher this week. They've started a little bit higher early this morning, but that's, they're still trading above 146. There's a possibility if there was a flight to quality in stocks, we might get to 148, but I don't see it going much past that. That chart is so doggone bearish that it's just really, really very, very scary. So that's the main thing. That's what we're looking at. We almost got another break coming up here. I want to talk a little bit when we come back for the break about the U.S. dollar for sure, because that's the key to a lot of this stuff. And we'll bring this up here and take a look at it when we get back from the break. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, they're chatting a little bit about the apogee and perigee of the moon. And by the way, Pythagoras was working on that back in 600 BC, folks, when they still thought the Earth was flat. So anyway, we'll be having our moon guy from Moon Tides, Dr. Al Larson, will be on tomorrow, and he will definitely talk to us. Folks, if you do not have that book, Your Electric Life, and you want to learn a little bit about the human body and how it reacts to electricity and stuff, Al has written a really great book about this. I don't think it costs hardly anything. It might even be free. We'll ask Al tomorrow. But try to get that book, Your Electric Life. I believe you can get it on the internet, and I think he's offered it for free. But it's a great explanation of how our bodies are basically nothing more than little batteries, and they operate on this, moving of the tides and stuff like that. So it's really very interesting, and with apogee and perigee, that's what happens. So it's, I don't know, it's just another way of looking at timing, and that's really what we're trying to do, is to find some good timing things to look at and put the odds in your favor, because there's no holy grail out there. The holy grail is between your ears. If you ever get that one figured out, the picture is going to be right, but it's not an easy picture to do. So focus on how much you're risking, not how much you're trying to make. That's the whole key to look at. When I went to work at Drexel, the first thing they sat down with me when I met with the directors at Drexel in New York, he said, Larry, he said, our folks they're very accustomed to losing money, and they're very accustomed to making money. The one thing they're not accustomed to doing is losing all their money. So you don't want to do that. He said, if you lose more than 25%, stop, because you're doing something wrong. And so mainly that's what you're looking at. It says Kindle at $6. That's dirt cheap, if that's what it is. Your Electric Life by Dr. Al Larson, certainly worth every second. Anyway, we'll see you folks tomorrow on an uptick, downtick, whatever it is. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!